Hello and welcome to another Forex Friday.
My man!
Let's just jump straight into it, as always. Okay, so we're going to start things off with the DXY. Had some pretty crazy moves, so I guess a quick update, and we had the Fed raise interest rates 75 basis points, and the Bank of Japan basically said they aren't doing shit.
You're a fucking idiot.
They are going to pin rates, I believe it's at minus 0.1%, and also commit to yield curve control for the 10-year yield, pinning it at 25 basis points.
Not crazy.
So we had a big announcement, and then so that was the Fed. They spoke on it was Wednesday, and then on Thursday, the Bank of Japan said what it said, saying that it was going to, continue with its yield curve control. But the Ministry of Finance also talked about defending the yield by intervening, buying yen essentially by selling some of its treasury reserves. And that's why, I'll get to it, but that's why we saw this huge drop in USD JPY. But yeah, a lot of volatility in FX. So let's just, start talking about it. So DXY, see, pretty big move. We never got this retracement down to the previous range or this midpoint of the previous range. We're just trugging along. It's probably going to keep going, to be honest. I don't see too many reasons why people would not buy the dollar, why they would hold their fiat currency, euro, whatever it is, just because it's looking bleak. And, the dollar being the global reserve currency is always going to have this international bid for it. So, people often use the analogy, it's the cleanest, dirtiest shirt. So that could be a good way to look at it because, you may hate the dollar and it may be losing value in the long term, but in relative terms, it's going to be gaining against other fiat currencies. Most likely, it's probably going to be the last fiat currency to fail. But anyway, let's just get into the actual technicals. So, by the way, we got the Minecraft sword mouse here to fight off these demons today because of this volatility. Alright, so we got, let's actually go down to the 4-hour. So just clear uptrend, no reason to fight it. We might get some sort of retracement down into this area of demand, last kind of area of consolidation. So possible we see some sort of retracement down into this level and then a continuation to a new high. Like I said, I still think the dollar has a lot of juice. Could easily see 120 in the coming weeks, maybe, month or two.
Whoa.
We'll see, obviously. But yeah, so something like this I'd be looking for. Retracement quick, not super sizable, but a little retracement into the 111 region. Possibly a retracement into this area demand. I kind of like this area better just because it lines up with the previous range. It's the midpoint. I guess I can show you that. So basically lines up pretty well. It's a little bit above, but more or less it is kind of confluent with that area. So this could be a decent area to see a retracement into. Come all the way back into here, into this area of demand. Lines up well with the previous range, and then we push to a new high. So basic idea, nothing crazy. And just real quick, because I always like to mention it, the dollar trade weighted index. So we can only go to the daily chart, and it's only a line chart, which is kind of annoying. But you can see we officially made this new high right here. Big deal, because it's not just the euro and the yen having trouble right now, and we got all currencies across the board except the ruble, which somehow today is up 4%, even though the dollar is up a percent, 127. So that's pretty wild. But anyway, the other currencies like the yen, the yuan, really every currency across the board. GBP's been getting smashed, absolutely hammered.
Little bitch.
But all these currencies, not just the ones that are predominantly weighted more heavily in the DXY, all of them are getting clapped. And so we're seeing just across the board dollar strength. Look at this uptrend. Hard to say when it would pivot after making some sort of high. But then I would be looking to this green area right here, retest that previous range. So something to the effect of just pushing up in here and then coming back down. But obviously not trading the trade weighted dollar index, but something to consider just because I think prior to the last week or two, In some sense, the dollar strength has really been, like, the focus of the dollar strength has been in its relative strength against the euro and I guess the yen, but it's really starting to hit all the other currencies hard. So you're going to probably see more strength in this, not just kind of this slight outperformance of the DXY because of the euro being weaker in relative terms.
Totally.
But anyway, let's actually transition to Euro USD. All right, starting the daily. So as you can imagine, clear downtrend, been in it for a while, and with the recent news, the hawkish tone of the Fed, them basically deciding that or more or less saying that the terminal rate, the rate at which Fed funds will peak, is going to be around 4.5%, maybe even 5%.
Damn!
And that is pretty substantial. When they implied that is a big deal. That's why we saw this huge sell-off in bonds and rates rising, and the dollar edging higher, just because if the Fed is more hawkish in relative terms, that creates a interest rate differential that is going to drive up the dollar versus other currencies. All right, so what am I looking at here? So Euro USD, we made this lower low. Actually, I can probably get rid of this, push it down a little bit more. So very possible we get a little bit of a retracement, just because we have been selling off pretty hard. Could be a little oversold at this point. So maybe eventually, I'm not going to call bottom or catch a knife, not my strategy, but at some point maybe pivot and start working our way up to this supply zone, retest the previous range, and it is confluent with this midpoint, which I generally like in terms of trades. When I have some sort of supply or demand zone line up with the midpoint, I think that is a good confluence to look at. So something to the effect of this, or we see some sort of retracement, maybe even just retest the bottom area of this zone. If you go down to lower time frames, this area looks like a potential area of supply to watch out for. Get rid of some of these lines. Yeah, so would be looking at this level. Now it all depends. I'll keep watching to see how much strength I think the euro really has in it. And when I say strength, I just mean like basically short covering maybe, or a retracement after being so oversold. But so this area right here, then if we drop down, let's go to the 1 hour. So this is the previous range, right? This blue line, we got the previous range, and we dipped below, came in here. So you could argue that this whole area right here is kind of an area of supply. It's what led to this big impulse down. So we have a lot of imbalance in this region right here. And what I might be eyeing, although the zone is a little bit, it's annoyingly big.
That's what she said.
I would maybe look to the midpoint of this zone, roughly. You could even play the range low, the previous one, the blue line, but possibly something like this, and just down to wherever the lower low is. So right now, the lowest low is right there. Let's see how hard to say if this would be. Yeah, this doesn't seem worthwhile, in my opinion. You could always tighten your entry a little bit, but that is what I'd be looking at right now. Obviously, we could see a much lower low before we ever end up seeing a retracement, in which case, say the lower low is down there, you can just push your target, and then the trade becomes a little bit more agreeable. But in the meantime, these are the areas for Euro USD I would be looking at. That midpoint of the previous range that kind of lines up with this area of supply, and then also the lower end of the previous range that lines up with this area of supply. But nothing that really screams a selling opportunity or buying opportunity. And definitely this would be a wait. I suppose, yeah, the price action for a previous low in the euro is so far back that I wouldn't really rely on it. At this point, it's probably going to be more psychological levels just because of the craziness going on in the volatility. I don't know if technical levels are going to be as reliable, at least in terms of like this long-term price action. But yeah, so looking for some sort of retracement, maybe short covering after this long downtrend, or I guess large bearish impulse in recent days, weeks, has come to a close, and maybe we get a little bit of strength, short-term strength into one of these areas, possibly this one, and then definitely continuation to make a lower low, right?
Yeah.
All right, let's transition to USD/JPY, the big one. Yeah, so this has been, it was so volatile because after the Bank of Japan said that they were going to just go forward with their easy monetary policy, not raise rates, at the same time, or not the same time, but like the day after, the Fed was extremely hawkish, basically saying that they were, the market in general raised the terminal rate outlook. So that is pricing in more rates, which means that the USD would rally because it's in relative terms. The Fed is more hawkish, raising more rates, and would, like I said, in relative terms, widen that interest rate differential gap.
Totally.
So we saw a big push up here, bust these two highs, and then this huge candle down, right? So this is basically the Fed meeting leading up to that. And then this is roughly around when the Ministry of Finance for Japan announced that they would be intervening or potentially intervening. I don't think they technically have yet. I don't know if that's been confirmed, but the Ministry of Finance basically said that they are going to. And so this is the market's reaction right here. This huge red candle that fell all the way into this demand right here. So it completely busted through this area. And we dipped into this. You can tell it was a pretty clear area of demand, and we pushed right back up. I am, despite what the Ministry of Finance is saying, I think that that Japan is really they're not gonna be able to hold the yen up that long, and especially relative to the dollar. They have a decent amount of reserves to defend the yen, so they have like the most treasuries actually out of any nation. They have like 1.2 trillion, so they have a decent amount of reserves to bolster their currency, meaning selling treasuries, dollars, to buy yen, and that helps, basically stop USD JPY from getting super out of control. But at the same time, for something like that, they would really have to get on the same page as the central bank, the Fed, because doing something like that, in general with G7 countries, you usually want to get the others' blessings, especially the United States, the leader of the world, so to speak. So if they don't get the blessing, I don't know. It could cause a lot of geopolitical consternation. So hard to say how it's going to develop, but I still think that the yen is going to be headed lower, meaning USD JPY higher in the long term. In the medium term, in the short term, just, there's going to be a lot of volatility probably, especially if the Ministry of Finance continues to talk about intervening or doing whatever, because they're going to try to scare the market as much as they can to buy themselves time, because as far as I see it, they just want to hold things together long enough to get to a point where the Fed pauses its rate increases, because once it gets there, it'll probably be good, and then maybe they're hoping for a pivot, that way it eases some of the pressure on the yen. But in the meantime, definitely looking for longing opportunities. So I was eyeing this area right here, and we had this push up the demand, and we got back into what was supposed to be or looked like an area of demand, and you can tell we found some strength there, pushed forward. So I was hoping for one more push down in here before continuation back up to this higher high, or the upper end of this range. So I don't know if we're going to get that, but in the meantime, I still think it's possible. So this is the area I would be eyeing. Just be careful, because the yen is going to be extremely volatile, especially now that the Ministry of Finance has talked about potentially intervening or actually intervening. But at the same time, I think the writing's on the wall. You got to be long USD versus pretty much everything, especially the yen at this moment, with their confirmation of maintaining their ultra low interest rates and yield curve control.
Yeah.
But yeah, nothing significant in terms of trades. Like I said, this is the only thing I'm really eyeing in the meantime. Maybe we get a little bit of or another retracement back into this zone to pull any of that extra liquidity that we maybe left behind, and then continue. I don't know if I see it getting as low as this area or even into this previous range, though both are definitely on the table, especially if the Bank of Japan announces some other thing about intervening or some new plan or whatever. A lot of this volatility, I mean, it's easy to get another one of these candles, these huge red candles, or a green candle with any one of these statements of a central bank or something like that. So be prepared for that, I guess. Have tight stops if you can, because you can get wrecked right now. But yeah, so something in maybe this zone. If we still start seeing weakness, I would just keep looking to every single meaningful demand zone for a buying opportunity, because I really just don't see the Bank of Japan being able to stop that.
Totally.
All right, well, that's enough USD JPY. It's mostly macro stuff just because of all the craziness going on, but small trade idea, potentially this. Anyway, moving on. One too far. Okay, so this is USD-CNH, another one of these ones that's getting clapped by the dollar. So China is in a similar position to Japan, not quite to the same extent because their currency hasn't depreciated, quite as much, but they have the second most reserves, treasury reserves, like a 950 plus billion in reserves to defend the yuan if it starts sliding too aggressively against the dollar. Again, that's probably something they would have to consult the Fed about, because usually when you're defending currencies like that, you kind of want to get the central bank or the Fed's blessing. So I would look for developments in the FX market for any of these countries whose currencies are really starting to depreciate, whether or not they're going to start bolstering their currencies by selling reserves. Definitely either reserves to see how much they're depleting. But in the meantime, this area right here, I would be looking to see some sort of retracement, buying opportunity, clear demand zone. I mean, got these red candles that signal some level of consolidation, and then this large impulse that created this imbalance in this general region. So I would love to see that imbalance filled and some sort of return into this level before a pivot. At the same time, I think this level is the second one I'd be eyeing. It really depends. It could be either. I'd probably be willing to take both. If I get stopped out in this one, I would take this one, and it would probably end up being profitable overall. But those are the only areas I'm really seeing. And this one right here kind of aligns with this previous range too. So you could say that's a confluence for taking that long in that general area. What is this, a 3R trade? Actually, a little bit more, because this higher high has been moved. Yeah, so we got this higher high. So it's about a 4R trade. Let me push this down a little bit. We can even get the entry in there. So I'll be looking for something like that. And that's a sizable drop. What is this? Oops. Yeah, nothing crazy. I mean, with the volatility we're seeing in markets today, I mean, USD-CNH is up 75 basis points today, so going down 36 as a small retracement is definitely not out of the question. Totally possible. Also keep in mind it's Friday, so this would probably be a next week move anyway. But yeah, that's what I'd be looking for. Somewhere in the zone. Pretty simple. Nothing crazy.
Yeah.
All right, next pair. All right, what do we got? Euro AUD. Okay, so this is interesting. What am I seeing right here? We have a higher time frame downtrend. No fighting it, right? Going down. And we had, it's kind of a messy chart right now, but we have this low, right? And this high right here is what led to this low. So right now we're in some counter trend retracement, and this is the supply level that I would be eyeing, because that is the obvious point. This is the previous high, so if we're going to make a lower high, it would presumably pull liquidity from this supply zone before continuing its trend to a lower low.
My man.
And also we have this area of imbalance that looks like, would be nice to get filled. Doesn't always get filled, but it would be nice.
That's what she said.
So I would possibly be expecting price to push higher to fill some degree of this imbalance, possibly pull from this zone and then continuing down, hence this order right here. Doesn't mean we're going to. We could easily, I mean, it's just, I don't know. I did think that price would at least push above, oops, let me get rid of some of these. I did think price would at least push above this line, because we have, this kind of area of liquidity. If I drop down, it might be a little bit more clear. This area of liquidity, right? I mean, we had this big impulse down that left a lot of this imbalance, and then we had some, not equal, but, relatively close to the same level highs. So a lot of liquidity resting in this general area. And so for that reason, I thought that price would for sure break above here. Still could, obviously, but we fell short right here. And we are currently in demand. As you can see, we pushed higher, had this low that led to this high, and it was a pretty large impulse. And we had these short-term levels right here. Whoops. Short-term levels right there that built up liquidity. We busted through to fill some of this imbalance. So pretty textbook into this demand zone, and now we're pushing higher. So could easily see from here a push above that area of liquidity, and then maybe some kind of similar price action, just slowly making lower high or higher lows and higher highs until we get to this supply. But I would really be looking for any sort of pivot or weakness in this region right here. Doesn't necessarily have to resupply, especially with what we're seeing in currency markets right now. There's so much weakness and strength for different currencies that maybe don't have enough gas to get them all the way to the clear areas of supply. But anywhere in this imbalance area, I think would be a decent opportunity if you're seeing weakness to take it short down to the low. But that is one of... Get the fuck out of here. What is this? Balance budget. Canada.
Little bitch.
Yeah, so that is what I would be looking at. Potentially, if you're interested, I suppose you could take a long if it gets a retracement back into this demand. I do like that we went into this demand zone and we're making higher lows. That is a good sign that this demand has a lot of strength in it, a lot of liquidity, or a lot of orders, and so you're seeing this like ascending higher lows, which is good. So in the very short term, we're seeing strength. In my view, possibly enough to get us above this level to fill some of that imbalance. But I still think the trade to look out for is the short trade off of anywhere in this very large region. Right?
Yep.
Okay, that pretty much does it for Euro AUD. Let's transition. Or we got Euro GBP. So this has been, look at this. This is crazy. Volatility is wild in the FX markets. Look at these candles. Jesus, these are 4 hours. Okay, so we have this previous range right here. And, talk about this a lot. Huge impulse. Got this area of demand right here. Pretty clear. 4-hour chart, just this red candle. Or black, technically. Whatever. And we have this large impulse, a lot of imbalance, and this demand zone lines up pretty perfectly with the midpoint of this range. And I love that. That's one of my favorite confluences. We have this demand midpoint. That's where the entry perfectly is. And actually, we can bust this higher high all the way up there. So risk to reward wise, if it does retrace here, pretty decent. You can even give yourself some more breathing room. And I actually based this stop off of the low of the green candle just to be safe. And even then, now with this crazy high, still over a 5-hour trade. This is pretty aggressive move. Could easily see a equally aggressive move right back down. But could also see just a little trickle. Either way, I would be eyeing this level. I think this is a clear as day demand zone. Lines up really well with the midpoint. Short of that, I guess you could look for some. Here's the 15-minute chart. We have this area right here, a little bit bigger than I would like, but you could just take the midpoint of that range for your potential long. So something like this, target the new high and stop invalidation right below this zone. So almost a 4-hour trade, basically 4-hour trade. Not bad, would be eyeing that. That's probably, I suppose this is a kind of area of demand, but not reliable enough in my opinion. It doesn't mean we couldn't see a bounce from it. But these are the two areas to be looking for. This is the bottom one, more higher time frame. If we do see a retracement after this huge move, in lower time frame, we could get a retracement. How big is this? Whoops. Come on, where's my ruler? There we go. So, yeah, 66 basis points, nothing crazy. We're up 188, 87 basis points today. So, within the natural range. Wouldn't be surprised at all if we saw a retracement even today into this level before a continuation. But again, most of these plays will probably be more or best saved for next week.
Nice.
All right. Yeah, so we got short time frame or lower time frame potential move, and still eyeing this as the higher time frame retracement down into the previous range supplies or demand zone.
My man.
All right, let's transition. What do we got next? GBP USD. Okay, go to the daily chart. Okay, this is, yeah, the British pound has been getting absolutely clapped. It's embarrassing. Come on, UK. So prior to this huge candle, I was eyeing a lot of these areas. I'll get down to that in just a sec, but let's just do quick higher time frame analysis. So obviously downtrend, don't fight it. That should be your base case, looking for sells. Obviously you can take counter trend trades, but just keep that in mind. Always have the higher time frame or view lower time frame trades, supply zones, demand zones in the context or through the lens of higher time frame price action. But we got this, whoops, my drawing tool. So we got high, kind of a low, kind of a high, a low, lower high, and now we got a way lower low. And actually I should move this down right here. And we could still keep going, so not calling it quits yet. But let's go down to the 1 hour. So there's a lot of areas of potential interest. I mean, lower time frame, this is the obvious one. I generally don't like trading these just because we have this huge impulse down, could be really oversold. Doesn't mean we couldn't get a quick retracement and then push down to match this low or make another lower low. But in general, I find these trades, the risk to reward not being super ideal and the trades themselves not being particularly reliable when price is already so oversold. But, you know, to each their own. Now, this area I like a lot more. It's again a pretty large zone, but as always, I would just take the midpoint of it right around there to take it short down to whatever the ultimate low is, you know, for a lower low, and then pretty clear out invalidation just right above there. Decent trade, pretty good, 4.5 hour, a little over that. Aside from that, this area right here, though we did, as you can see, so price came back down, came back into that zone, so we got a little bit of the liquidity in this potential supply zone, or what looks like a supply zone, before a pretty aggressive push down. So in that sense, it's already been tested, meaning it's not necessarily going to be tested again, which gives me a little bit more reason to trust this as the supply zone. But higher time frame, we could trade all the way up to this area, I think, just because that was the real high that led to this low, because this is the low, this is the lower high, and now this is the lower low. So we really could see, not that I think we will, but we could see a retracement all the way to this level and then take it down to the lower low. But I mean, that'd be a huge move, and I don't know if we're going to see any retracement all the way up to here. I mean, that's 7%. That's aggressive. I don't think that's going to happen. If that did happen, that would really be maybe because of central banks intervening and forcing dollar weakness because it's starting to be too much of a wrecking ball, because that would be that's a pretty wild reversal. Hence me being more willing to take a short off of this level right here around 112.88 or 87, whatever it is, doesn't matter. But yeah, this is the area of interest right now, possibly this higher one, but like I said, we pulled liquidity from it already a little bit. We didn't exactly get all the way in here.
That's what she said.
But we got enough, just the tip.
My man.
Okay, next one. We're going to do Euro JPY. Okay, so this was, I actually took this trade. It was a pretty lucky entry. I mean, you can see clearly, this is ridiculous. Sometimes I don't even know how I get into these trades, but I'll walk through it just to explain what my thought process was. Right now, we're trading in demand, so we're just kind of like consolidating in this area of demand. So no real trades in the short term, but I'll walk through this because it is a learning opportunity. So we had, actually go a little higher time frame, go to daily real quick. So we have a clear uptrend, right? Now, I mean, I took a sell, so it was counter trend. You have to keep that in mind. I mean, base case is during an uptrend is taking longs, but there are pretty obvious counter trends that make it clear, and I'll get into that. So we were in an uptrend, but actually, let's do this first. So we had these low, higher high, higher low, higher high, and then let me see, 1 hour chart. So this is that high, the absolute high that we've made so far, at least in the interim. And we had this low right here that led to that high. You know, we pushed up here, made a high, retraced, that was the low that led to this high. And then we came down here, broke structure, right? So that is when you would want to be looking for sells. But I waited until we had this lower high put in to kind of confirm that this downtrend was now happening, or at least counter trend, because we broke structure, right? We put in that lower high, didn't make a higher high, and then we made another lower low beyond this level right here. So once we blew through this level, we made a lower low confirming this counter trend, this bearish counter trend, short term. And so I identified on the 15-minute, actually, this area. Whoops, let me get rid of this line. So this was the high, right? So this is the break of structure, and then this was the high that stemmed from that. So I looked at that high, found the area of, or what looked like to be a supply zone, and just based it off of, this green candle to the absolute high, right? Because we were not going to trade past that if we're continuing this downward trend. And pretty perfectly, price came down, didn't touch this demand, and I think that's important because not that it matters. I mean, we obviously could still trade below it, but if price trades into a higher time frame demand, or did trade into higher time frame demand and then pushed up, I would say there's less. The short trade is less reliable because you're basically waiting. Because again, we're higher time frame bullish, right? So you're looking for price to trade into higher time frame demand to continue its trend. So when it does trade into higher time frame demand, you should be less willing to take it short on some sort of retracement. But we never did. As you can see, let me get rid of some of this. We basically traded right here, never got into this little range right here of area of demand, and then we pushed perfectly into that area of supply, like almost to the wick. And then all I did was just, pretty clear in validation. I actually had a pretty generous stop considering the size of the supply zone, but the risk to reward was so good, I was like, I don't really care. But anyway, just targeted the demand, pretty straightforward, very simple. But moral of the story, I saw this uptrend. We had a low, we broke structure, we put in a lower high, we pushed down, didn't trade into higher time frame demand, and retraced into that supply zone. So took it short to that higher time frame demand.
Yep.
Right, got it. Okay, so next pair. Euro. Oh, this is a trade I'm actually in right now as well. So Euro, Swiss franc, and let's start with the daily per usual. So downtrend, don't fight it, except when you do fight it, like I did in the last one. You get me. So we have a low, a high, a lower low, lower high, lower low, lower high, and we'll just call this. We got lower low down here. So clear downtrend, and we got a lot of action right here. Actually, so now that I zoom in, you can see this is the low, this is the high, and then this is the new lower low. So this is the level we'd be looking for in terms of structure to like max level to reach, I guess, as a retracement before like a break of structure, and then maybe looking for buys. Let's go down to the 2 hour. So counter trend, right? Made this, or no, actually this is consistent. Higher time from downtrend, so not counter trend, but we have this high, and we're making lower highs, lower lows. Made this one right here, and let's see. And my computer's lagging a little bit. All right, so let me get rid of some of these, clear these off. Actually, I'll just go through some of these zones to kind of make it clear. I didn't take these trades, but I'll still map it out. So we have this high, right? And this area of demand, right? So this demand, because price pushed through it, right? Broke through here, especially broke through this area of demand because of this impulse that led to the high. That demand flipped supply. So we came out, or we pushed down, came back into that previous area of demand that was flip supply. Didn't reject, we rejected, but we still went back in one more time and then led to the low. So you can tell this area of previous demand was functioning as supply. And then we pushed down. We made another area of supply right here, just basing it off this green candle that led to this huge impulse. So you could say we had this level of imbalance to fill This wick got, right here, but we still have this area of imbalance to fill. Price came, or kept going, made another low, didn't make or pull from that zone yet, but that didn't really stop me because I think I had the order in anyway. We made another low, and then this was just the crazy volatility I believe we got during some of the central bank interest rate decisions. And just, I mean, this is wild. This huge spike that just went perfectly into this zone. And now I'm just waiting for it to hopefully reach that lower low. I definitely could have played this zone. I think I honestly, I might have, had I not, because I'm pretty sure I had the order in. Actually, no, did I? I don't even know. Doesn't matter. But I preferred this zone just because of the clear area supply. I mean, this imbalance that I thought needed to be filled. This impulse right here, or this like downward trend, wasn't really aggressive, so it didn't offer or look like a meaningful supply zone. Because as you can see, we have, I mean, this is an aggressive sell, right? And hence the imbalance right here. This doesn't really have as much imbalance. It's not as obvious. So in that sense, it didn't seem to be as reliable of a supply zone. Hence me preferring to take the trade from here. But other than that, pretty basic. And like I said, just waiting for this lower low, in which case maybe we would be eyeing, let me go to the 15-minute area of supply from here. So possibly maybe trading up to that level, but we'll take it all in stride. And before you think I'm only focusing on my winners, let me go to the next one. So this trade was a loser that I had this week, where, let me go to the daily chart and just walk through it. Oops, the 8 hour. Yeah, because I hate traders who only talk about their wins. Every trader loses. It's part of the game. So I thought I'd include some of my losers and at least walk through it, my thought process behind why I took the trade, and just what happened.
My man!
So, actually, the daily chart's kind of messy. Fuck that daily chart. Let's go to the 4 hour. Okay, so clear downtrend, right? I was looking for sells. Clear downtrend. And we have this high that got to this low, that led to this high, that led to this low. And then we had this high right here that broke above this, really traded into this area of supply, which is fine. And so my thought was, this is the new area of supply, right? Because not only did we break this high, which usually once you have like a high that leads to another high, a low, and then one that trades in between, so kind of bust this one. I think I've talked about this before. It's like my Three Stooges trading pattern. Not that this is one, but it's a similar, in a similar vein. So usually that tends to make this area a reliable area of supply, because we already traded into this one, we made new supply, but what turned out happening is we traded back into that previous one rather than this one, and so I got stopped out, even though the trade was, eventually, no matter where my take profit would have been, it probably would have been amazing. But let's drop down to the lower time frame to get a better idea. So this is what I was basing my zone off of, just this area. And again, maybe in hindsight, the lesson to learn here is that this isn't a clear area of supply. As you can see, it's more of like a trickle down, not a large impulse, which could be a sign that there really isn't that much selling liquidity in this area, despite it looking like a supply zone. This area, however, this previous zone, much stronger impulse, right? You went from this green, just straight red, pretty aggressive, down to this level. And aside from this wick right here, I guess this wick too, we did trade into this, and so this was maybe what led me to not be as convinced about this, because we already pulled liquidity. Mostly this one, this is kind of doesn't really count, but this one we came all the way back in, and we saw some pretty strong selling pressure. So you could say that this area showed that this this supply was definitely strong. But nevertheless, we traded back into it one more time. So I thought for sure at this point that we've gotten most of the liquidity from this zone, then we got a new, like a zone shift into this area. But price proved me wrong, pushed from this short-term demand zone and just busted through. I think my stop was like right there, and went into this area. And notice it didn't make the higher high, so still consistent with the structure, and then just pushed, and then just pushed all the way down to make that aggressive lower low. And because I'm nice, I'm going to include one more of my losing trades. Another one of these fucking Canada pairs. Got it out for you, Canada. Now, this was kind of a stupid trade, in my opinion.
You're a fucking idiot.
And I'll tell you why. So I was basing it off of this area of demand flipping supply. So as you can see, we had... Actually, I think I can tighten this zone a little bit right here. So you see this red candle that led to this huge impulse, right? And we came back in, it kind of caught a bid, and then we pushed down. So my assumption was that this area of demand flip supply, and what would happen is we trade out, come back in, and then continue to a lower low. But I think I placed the order, and actually I'll get the order panel out to give you like just an idea of what it looked like. It was something like, maybe like this. It was probably something like that. But I think when I placed the order, price was down in this region. So it looked like we were going to see something maybe like that. But almost immediately caught a bid and pushed higher into this area of supply. So had I been a little bit more, I guess, risk averse rather than going for this lower demand flip supply, I would have done this right here. I mean, pretty obvious trade, right? In hindsight, I mean, hindsight's 2020 is how it always is. But and then I would have just targeted this low right here because break a structure. So we pushed higher, and then we broke structure right here. So looking for the lower high, ended up being pretty obvious lower high off of this, and that would have been the ideal trade. Really, really good risk reward. Would have actually been profitable, like literally hit the take profit and everything. So hindsight's 2020, but that was my mistake. I shouldn't have trusted this demand flipping supply. I should have just focused on the supply zone at the top for the higher high. But lesson learned, and yeah, so like to talk about mistakes because they happen. Don't feel bad.
My man.
All right, what do we got? Next one, AUD JPY. Oops. There we go. So this is a trade I didn't get in. I was hoping I would, but I'll talk about that in just a sec. Let's go to the daily. So we had this range, right? And we traded above. So we broke the range, and now we're back down to the midpoint. And the midpoint is usually significant because you often see pivots, or it just ends up being a good point, like when price decides which direction it's really going. Like, is it going to... and you can usually, you don't want to base it like strictly off of the middle, usually like a zone. So call it this region. Price is going to try to figure out, and then once it just finds out it's, you know, going to the range high or it's going to the range low. Hence these two conflicting order ideas right here. I don't have any orders in, but just for learning purposes, I'm going to talk about this. Now, before I get into that, let's go into this trade idea that I missed. So as soon as I saw price, so we made this high, right? Busted above this previous range high. You know, this, we got out of this range essentially, right? Then we came back in, had a number of candle closes. So that is bearish. And this was really the move to capture. So, you know, price came back in below the range high, right? Had multiple candle closes. This is the hourly chart. So this is probably, you know, over 4 hours of candle closes below. I mean, maybe way more than that, probably like 8 hours. I can't count. Don't worry about it. But multiple candle closes below. That's the sign to really, the trigger to take it short on a retest of the range high that it just broke below. So this was the play. I was just hoping to get one more test, you know, from here, maybe one last pull like this, you know, basically where this candle is. But we never got that full push into this zone for the continuation down. So I missed it, unfortunately. Like I said, this probably would have been the better trigger that I should have been watching. But again, hindsight's 2020. But anyway, yeah, so back to the midpoint idea. So we traded down to this midpoint, and price is probably going to be looking for, you know, consolidating a little bit and then deciding. So much like this play right here, where price broke below the range high and retested, I'd probably be looking for something similar here. So if price has a number of candle closes below the midpoint, I would look for a retest, you know, like this order right here. Call this order 1. Okay, that's it. There we go. That's was it's hard to draw. There we go. Order 1, right? So we got order 1 right there. If we get multiple candle closes below the midpoint and then a retest for a continuation of this downtrend down to the low, right? And that is probably my base case. I think that the short is probably going to happen, or I'm placing a higher probability on that short trade rather than the long one, but you still want to prepare for both. So we got order number 2. Okay, so it'd be the similar thing, right? So we got, oops, I already got erased my 2. I'll draw it again. Same idea. We have like even if price gets below, if it's just a, you know, like a couple candles, nothing super crazy, because we already had that a little bit, right? This looks like mostly wicks, but still we are showing strength around this midpoint. But if we get multiple, if we dip below and then get multiple candle closes above, then here, like here, even if we dip below like this, but then get multiple candle closes above, then I would be looking for the retest of the midpoint to go long. So just the same idea as the order 1, but the opposite direction for order 2. Just looking for those candle closes above the midpoint and then a retest of the midpoint to go back to the range high. Possibly retest the supply zone and maybe get a short there. But I wouldn't be playing that yet, because what are we in? Are we in a higher time frame? Uptrend? Yeah, we're in an uptrend, so definitely could be long. But at the same time, I wouldn't be surprised if we trade into this area of demand before continuing that. So, and that would be consistent with price, you know, going through order 1, something like that, and then maybe we trade higher like this. But these are the ideas I'd be looking for in the interim, just basing it off of how price reacts to this midpoint, right? Okay, so let's transition. Next pair, GBP AUD. Okay, as always, higher time frame, downtrend, right? Keep that, whoa, what? I'm on TradingView. Keep that in mind always. And let's go down to the 4-hour. Okay, so let's map out some of these highs. So we got this high. Whoa, what? We got this high that led to this low, led to this lower high, that led to this lower low, lower high, and now we're at the new lower low. So anywhere in this region would be the ideal point, because this is the high that led to this low. So this area of supply is, I would say, the highest conviction to take a short. Now that doesn't mean we couldn't trade higher into any one of these supply zones. I have them mapped out for that reason, just in case, and mostly because we never retested them, right? So we came down, didn't ever get into that zone, right? We just kept going, and then we pulled liquidity from, I guess you can call that the supply zone, but we never retested this one, right? So if there are a lot of orders in there could be a lot of liquidity, sell side liquidity, or selling liquidity that isn't, that hasn't been captured yet. And same goes for this one right here. So pretty aggressive selling, right? We had, come on, TradingView. So we had this slight consolidation after this lower high and a meaningful impulse, right? So you could say we have some imbalance in this region right here. And none of that has been filled. We made a new lower low and a lower high, but still never went into these zones. So for that reason, I would be eyeing them. So not that I wouldn't be willing to take a sell off at this level. I still think that is the ideal selling point, especially just given GBP's weakness. I don't know. I mean, how much of a move would this be? Yeah, 3%. So that's a pretty aggressive move for a retracement. And so I guess in the meantime, you could also be looking at this level. I mean, this is a pretty aggressive impulse, so potentially a lot of selling liquidity still left over here. But just given it's not at the lower high, right? You always have to keep that in the back of your head, right? Because if you're not trading at the absolute high or the lower high, like consistent with structure, then it's totally possible that it just busts through your stop, and it's still consistent with that bearish structure. But that doesn't mean that it won't pull. Whoops, it won't pull into this supply zone and then continue to a lower low. Hence me, I would look at both of them, obviously, but I still would be leaning more to this one, this higher time frame, kind of lower high, and base the selling trade off of that. Right. Okay, we are on to our last pair, everyone. Maybe it's USD and Swiss franc. So this is going to be quick one, nothing crazy. Now, I found this pair interesting because, the dollar's been edging higher against most currencies, but historically, the Swiss franc is a pretty desired currency. People always say it's just, it's always overvalued, yet it still goes higher. And there's something about the Swiss franc, just the Swiss in general, they've done a good job at, I guess, somewhat painting their currency as a safe haven currency, not to the extent of the dollar, and it's not the global reserve currency, so there isn't going to be this demand. So I still think that the dollar would probably edge higher in relative terms, but not quite as aggressively as a lot of the other currencies. Nevertheless, I'd still be looking for longs. That is my bias, and the trend is consistent with that bias. We are making higher highs, higher lows, higher time frame. Again, this is the daily chart, so this is a long time of higher highs and higher lows. No reason to fight it, especially, I would say, if we bust above this level right here, right, to make a kind of shorter term, semi-shorter term, higher high. And then we drop down to lower time frame. So we have this area of demand. So cleared, you can even base it off of this red candle, but just to be safe, you can base it off of that one. So we had this consolidation, a little bit of a range trade, and then an impulse higher that led to this high. So you could say we have some imbalance in this region to be filled, and that lines up very well with this higher time frame range midpoint, right? So we busted above the midpoint, had this consolidation, and then clear move above. So basically looking for a retracement back to that midpoint into this area of demand right here that I just mapped out, and then a continuation of this uptrend to at least a higher high right here, if not to the range high. Hard to say, like I said, because even though in relative terms, I think the USD will probably gain against the Swiss franc. I don't know if it will gain that aggressively. Still think this is in play, so I probably would be leaning towards this, and maybe even a little bit higher up to the actual high for a new higher high. That sounded silly. But yeah, that's what I'd be looking at for USD Swiss franc. Just a retracement into this demand zone, confluent with this higher time frame range midpoint. I like that a lot. And just get an entry right at the top of that zone, clear invalidation. You could base it off the red candle, but I was basing this off of this low right here, just to be safe, and then targeting the high. And it's a pretty good trade for our trade, which is, obviously
nice.
But yeah, that is all I have for you today. But I thought before I headed out, I'd end with a nice little meme. Woo! So the Bank of Japan right now is doing some nonsense. And I thought this captured it pretty well, because they really don't care. They're just doing what they want to do. But on that note, I will actually sign off. And I'm going to be out of town next week, so no Forex Friday. Aww. But in the meantime, stay happy, humble, and most importantly, solvent.
And we say bye-bye.